Hello, beautiful people. Today we'll be starting up with what do we have under financial decision, what do we have under dividend decision, and finally, what do we have? What is the difference between your financial management, and identifying the most appropriate factor of sources of finance, factors to consider, importance of finance. All these things we'll be studying under the financial decision, and finally, we'll be studying the dividend decision as well. So after this, we'll be going with the differences of your financial management and your financial accounting. So what are we studying right now? We are studying financial management. That should be differentiated from what? From financial accounting, from management accounting. All these things should be differentiated. You should learn the differences between your financial management and your financial accounting or management accounting. Great. Yeah. So let's start. So till yesterday we spoke about what is financial management, what is the definition of financial management. Financial management first strategic planning or directing controlling of financial undertaking in an organization. It focus to raise funds, allocate funds, and control funds to maximize the value of the firm. Great. So in a company, minimize where will I get finance from? Where will I get funds from? Where will I invest these funds? And where should be my how do I pay my dividends? These are the main questions to be answered. And while answering these questions, what are the points to be kept in mind? They are organization's commercial and financial objectives, the broader economic environment, and the potential success method to handle it. Simple. Financial management, your chapter 1 is divided into 5 parts: 1, 2, 3, 4, and 5. First one being nature and purpose of financial management, we just covered it. Second one being relation between corporate strategy and corporate and financial objectives, that is the second one, under which we'll study financial objectives, that is share wealth maximization, profit maximization, and growth in earnings per share. Under stakeholder objectives, we'll be talking about shareholder context. Under rules of management and goal congruence, we'll be talking about agency theory, managerial reward schemes, and corporate governance codes. Under non-profit organizations or not-for-profit organization, we'll be studying the planning and objective setting and value for money. As simple as that. So until yesterday, we have studied almost all of these things, and all of these details are related to your financing decision. Great. So let's get. So this chart, students, this chart what you're seeing over here is nothing but, I'll make another one. So here, this chart what you're seeing over there is nothing but here. One sec, yeah, little bit. This chart is nothing but this chart from your textbook. Great. We have equity and debt, which is the finance, and here we will be investing. That is what it is. It is equity and debt. Debt and equity, which will come and make finance. This finance is given to the company. The company will give it in 3 different places called as working capital, non-current assets, and dividend. So money comes in through finance and money goes out through these 3 areas. As simple as that. So what is the meaning of financing decision? Yeah, let's write. I hope I'm visible. Yeah. Give me a second. Yeah. So under financing decision, what will we be studying? So we'll be making key points for this, and these key points are also available in the notes that I've made for you. If you want, you can text me up on Instagram, any of the platforms that will be mentioning in the description today, and through that you can ask me the notes. Yeah. Financing decision. So first of all, financing decision, I'll be splitting this into 3 sub points. Okay, 3 sub points. Point number 1, financial management decision. Point number two, I'm really sorry, it's the morning. Factors to consider. Point number three, importance of finance. If you guys have the textbook with you, the textbook reading goes like, before a business can invest in anything, I'll show you. Before the business can invest in anything, it needs to have some finance. The key management uh, sources it may be long term or short term, taking into account the requirements of the company, the likely demands of the investors, and the amounts are likely to be made available. Right. So what does this mean? This is I've separated it into three sub points like this, and I'll be explaining each of them so that it will be easier for you. So, financial decision making or financial management decision. What is a financial management decision? First of all, what should you do under financial management decision? You should identify which is the most appropriate source of finance. That is identification of most appropriate source of finance. And what is the meaning of identifying the most appropriate finance source of finance? Yesterday, as we had discussed, the example of Minimus, that where will I be getting my money from? Is so yeah, where will I be getting my money from a bank loan or a government scheme or bootstrapping? What will I do? Which one do I choose, sir? So this is what is your financial decision management. I'm really sorry. I'm really sorry. I'm for the answers because it's in the morning. Yeah, I've just woken up. Anyways, let's go. So identification of the most important, most appropriate source of finance. That is what we should do. And what are the factors that we should consider? So while doing the decision, what should I consider? We should consider company requirements. We have all studied this. We have studied this all. Yeah, remember? Think well. हमने ये सब स्टडी किया है. हम लोगों ने सब पढ़ चुके हैं हम लोग. ठीक है. So company requirements, investor demands, and available funds. So let's go back to the example where I said, this says company requirements को देखा. I'm really sorry. Okay, this point says company requirements को देखना पड़ेगा. What should I consider, sir? For factors to consider, what are they? See, यहाँ पे when we had these three questions, we had something called as a points to consider while taking a decision. So what were these points? It is organization, financial and commercial objectives, broad economic environment, potential risks to handle it. These are the normal points that we should consider. So company's requirements, it is nothing but your financial or commercial objectives that your company is planning. And final investor demands, what are the outsiders, what are the shareholders and stakeholders thinking. And finally, what are the available funds with you? If you have a lot of funds with you already, why should you again go and borrow funds? See, in our case, we have 50% in equity and 50 lakhs in debt. So we already have 50 lakhs of equity with us. Why should I borrow an extra 50 lakhs from the investor? Why should I borrow another 50 lakhs from my investors? I need not borrow because my Working capital is fine with this, and my fixed capital, I mean that my non-current assets is also fine with this. So why should I borrow an additional? And that's fine. All this is not required. And finally, uh, what is the importance of finance? Essential for every business investment. Why do we need finance? It is the main thing. That is where that is how the show runs, right? It is essential for every business investment. Maybe short term, maybe long term, maybe invested in working capital, maybe invested in any of the long term capitals like your uh, bonds, securities, land and building, machinery, plant, equipment, whatever it might be. But without finance, you can't do anything. That's as simple as that. So, yeah, we just spoke about this. Now we'll be speaking about the dividend decision. So, again, my dividend decision, I'll be splitting your textbook definition into three parts. Great. I'll be splitting your textbook definition into three parts. So yeah, for dividend decision again I'll be making three arrow marks. Great. I'll be making three. One sec. Yeah. Uh, yeah. So three arrow marks. So what is my dividend policy? Okay. Then what are the impact of my dividends? What will be the impact of dividend on me paying to the shareholders? What will be the impact on my business and the reputation of my business? Okay. Impact. And finally, relationship with financing. What is the relationship of dividends with financing? I'll give you a reading of your textbook definition of the dividend decision. Okay. It says, having invested wisely, a business will hopefully be profitable and generate cash. The the final key decision for the financial manager is to return any of the cash to the owners of the business in the form of dividends. Yeah, and if so, how much should be distributed? The alternative is to retain some of the cash in the business where it can be invested again and further returns can be generated. The decisions are closely linked to financing decision. The decision of on the level of dividends can be paid can affect the value of the business as a whole as well as the ability for the funds, of the business to raise funds in the future. So before we talk about the dividend decision, I would like to tell you about a few more things. Okay, a few more basics about the dividends. So let's assume you better stay here. Yeah, let us assume our company Minimuse, we had a profit of around 2 CR this year. Okay, हमने इस साल कितना पैसा छापा है भाई? $2 crore छापे हम लोगों ने. And what can I do? This is my pure profit, pure net profit. I can be paying my dividends on this amount. So I'll have two arrow marks. Come on. Okay, whatsoever it might be. Yeah, I'll have two arrow marks. Something's fishy. Give me a second. Yeah. So I'll have two paramarks. One, I'll distribute it to my shareholders in the form of dividends. I'll be giving it to the form to my shareholders. Distribute to the form of shareholders, to shareholders as dividends. And the option that I have is to retain. That is called as flowing back of profits. What is this called as? We see it as retained earnings. So my decision should be how much should I distribute and how much should I retain in order to keep my business active, in order to keep my business active, and in order to keep all of my stakeholders and my shareholders in a happy position. How much should I be distributing to them? What will be the impact? That is what will be spoken under your dividend decision. I hope you understand this. See, how much should you distribute so that your shareholders are happy enough and they keep on investing and they do not withdraw money or keep on selling, which will impact the image of the business in the long run, as well as it will impact the image of the business in the stock exchanges. And the other thing, how much should I retain? If I keep on giving out all the 2 cr, my capital would never increase, and I can never expand my business, right? You get it, right? So for me to increase my business, for me to expand my business, what do I need? I need some of this part as well. I need some extra investment as well. Instead of taking loans for that, I'll have my net profit for that. So what I thought was 50 lakhs worth capital, I mean worth revenue, I'll be giving it as dividends, and the remaining 1.5 lakhs of your net profit, I'll be retaining it, and I'll be putting this into new projects. As simple as that. While taking a dividend decision, what should be the 3 points that I should consider? Like the way I considered for my investment decision, sorry, financing decision. Okay, for investment decisions, I haven't given you these points. Yeah, I'll be doing that now. So, what is the dividend policy? I mean, what is the dividend policy? What's the meaning, sir? Dividend policy means the businesses who are yeah, the businesses who are actually, you know, giving out dividends, they'll have the choice to choose the policy on which they can divide the money. I mean, they can give the money. That is, business and choose to return cash to the owners as dividends or retain it for reinvestment. Either, okay, we'll not do this. We'll go with arrow marks. Return money to shareholders or retain money. That's what we spoke over here. This is distribute and this is retain. Yeah. And what's the next thing? What is the impact of dividends on my business? Dividend decisions influence my business value and future decisions. See, that is what we spoke again. If I have impact business value, so let's assume we'll take 2 hour marks. Let's assume I've paid dividend, paid full dividend, or I've not paid. What will be the business implication, sir? What will be the business implication? I've paid full dividend. In the long run, I won't have no funds. I don't have funds in the long run. Hence, it is directly impacting my business. In the long run, I'll have just the capital and I'll have no extra money from which I can expand my business from. So, if I pay my full dividend, in the long run I'll have no funds. And what are the implications for not having paid dividends, sir? If I do not pay dividends, my shareholders are unhappy. And if my shareholders are unhappy, my reputation falls in the stock market. Hence, what is the point, sir? You should be wise enough, you should be clever enough in payment of your dividends that you should save money for your future purpose, and also you should give out a little bit of dividends so that you keep your shareholders happy. How do I give out, sir? There are two methods in what your syllabus is suggesting, that is maximizing and satisficing. We'll be studying that later. Great. So, and finally, relationship with financial. This has a strong relationship with your financing. So, what is strong relationship with your financing, sir? As we have discussed over here, retaining of profits. As we have discussed the. One second. Give me a second. Yeah. As we have discussed the blowing back of profits, as we have discussed the retaining of profits, it has a strong relationship to keep with financing of what, sir? Financing of funds, obviously. So what will I be doing? I'll have, if I have my retained income, dividend policies like closely linked to financing decisions. Why is this so, sir? Because all of my retained earnings will help me expand my business. So, in this way, all these three things should be kept in mind while taking a dividend decision. Yeah, I hope you get it. Now, since you have spoken about financing and dividend decision, I'll be giving you points for investment decision as well. Okay, so we'll be talking about investment decision as well. So for investment decision, again, 2 arrow marks, 2 arrow marks, 3 arrow marks. Yeah, let's see that. Investment decision, 2 arrow marks. Investment decision is really very easy. It's not very much complicated. Come on. Yeah. Arrow mark number 1, investment in non-current assets and investment in working capital. Let us assume, sir, we have a capital of 1 crore rupees and all the investment has been done by me in, we had spoken over here, all the investment of mine had been done, that is a 10 plus 90 differentiation had been done in shares, bond and etc. And the remaining 10 lakhs was my working capital, which was useless. And that's why I came up with an idea of doing a 50-50, where 50 should be my working capital and the remaining 50 I'll be investing where my money grows. Easy, sir? Yeah. So what are the different sectors where I invested? One is working and the other is investment. So point number different investment in NCA and investment in your working capital. And finally, out of which my investment decision doesn't usually speak about dividends, because it doesn't have, for dividends we have a completely different sector. Yeah, it's as simple as that. So the next one, we'll go to the next topic. What is the differences between financial management and your uh, what do I call your management accounting. The textbook gives a very long paragraph of what your difference should be. It gives an explanation of how is it happening, what is it happening, where is it happening, all of these things. But as of now, I'll be giving you a detailed, a brief table kind of format, so that you can know the differences really very easily, and for you in the examination it will be helpful. Great. Yeah. Yeah. So this is the format wherein you will be studying the difference between your financial management, financial accounting, and management accounting. See, the textbook never clearly defines what's you should differentiate in a very tabulated form, but the examination might ask you to give the clear differences, and reading a whole paragraph set up like this, like give me a second, I'll be showing it to you. Yeah, the paragraph set up like this, like financial management should be differentiated from your uh, financial accounting. What where is management accounting? Where is cost accounting? You'll not we'll not talk about all of that, but it gives you what is the meaning of management accounting. It gives you what's the meaning of financial accounting. It says management accounting is concerned with providing information related to more day-to-day functions of the control and decision making, but whereas financial is doing it with the historic results and past plans and decisions. It's just consolidating results and giving it to you. Management is analyzing the details for your day-to-day decision making. Great. And what is the main difference? It is the time scale. Time scale. The financial accounting. Okay, financial accounting runs for a 12-month horizon. We all know what is the financial year in India. It is 1/4/2/31/3. This is the financial year in India, and uh, in USA or any other countries, it starts from 1/1 to the 31st of 12. That is how it is. So, fun thing is, our financial accounting runs in a 12-month horizon, but my financial management is always concerned with the long-term raising of finance and its allocation of and control, as you have spoken. It's it's your acquirement, that is long-term raising, and then allocation, and then controlling the resources. That is how it is. As simple as that. And finally, oh, this is not at all time bound. Financial management, it's not at all time bound. It keeps on going. It doesn't have to make closures within a 12-month period or a 6-month period. It doesn't require all of these things. All of it is a long-term period. Management accounting, we'll speak about management accounting, is concerned with providing more day-to-day functions of the control and decision making, like budgeting, cost control, variance analysis, evaluation of alternative use of short-term resources. All of these things will be given by your management accounting. But is this in a very good format, sir? No, not at all. This is not in a very good format. You can't write paragraphs like this in your examination. It will take a lot of time. So if they ask you to differentiate between your FM, your FA, and MA, we'll be going with a table like this. Great. But before that, we'll be speaking about financial accounting as well. Financial accounting is not directly involved in day-to-day planning, control, and decision making of an organization. Rather, it is concerned with providing information with the historic results. It doesn't even care of what's happening today. It says, I've bought it for this money, I'll be putting it at that money only, and I'll not be changing anything. That is how financial accounting works. This merely works on debit and credit formula, and nothing much. So this is just the raw data in a very in a very good format that I'll have to use to make my decisions work. I hope you get it. So that is how it is. The purpose of this. Yeah, the purpose of this is to keep the owners, the shareholders, and other people informed of what's happening in the organization. What is the financial position? What is the financial performance? FP and FP, financial performance and position. and it will not be concerned with the detailed info which is internally given by the management accountant and financial managers. Great. So I hope you get what financial accounting means. I hope you get what financial management accounting means, and I hope you get what financial management means. So to have a brief understanding and great exam level answer, we'll be speaking about who are the users for. So this is the basis. This is financial management. This is financial accounting. This is management accounting. So we have five main differences. How many? We have five main differences. So first one, users. Who are the users here? Most probably the top management. If 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 my financial management if my financial management is not making, you know reports, is not making reports, who will be directly affected, sir? The main top level objectives, the top level management would be heavily, affected by your issue. Hence, who are the users of your financial management reports? It is top level management. And financial accounting, who are the users? Any random person will be getting the financial accounts. This is a thing that everyone will be having. The external users like investors and regulators. Even the management knows of what's happening in the organization. So why should they actually consult the financial accounting? They'll be rather consulting the financial management or the management accounting, so that they can have clear ideas and clear ways to take decisions. And finally, management accounting, who will be taking this? The internal management, the board of directors. They will be taking the use of management accounting. What is the time orientation, sir? What is the time oriented? Financial management, as we have spoken, there is no fixed period, and it's usually future oriented. And for financial accounting, what's the time period, sir? It's usually historic past records, and it has a horizon. It has a horizon of 12 months. Simple. And for management accounting, what's the time period, sir? It's both past and future. It takes details from the past. It takes cost info from the past. It takes financial info from the past, analyzes and tells us about the future. What are the rules and standards that I'll have to follow under financial management, financial accounting, and management accounting? For financial management, it is completely decision making. Decision making is an art. Decision making is an art. What is it? It's a beautiful statement. Decision making is an art. So, does an artist will have strict rules? No, not at all. Everything is analytical, everything is based on the personal discretion of the artist. Everything is based on the personal discretion of the manager. Yeah. And for financial accounting, no, it's not an art. It should follow either GAAP, the generally accepted accounting principles, or Ind AS in case of India, or accounting standards in case of any other country. And for management accounting, yeah, again, there are no standards, there are no fixed standards. It is flexible. Great. What is the focus on, sir? Where is the focus on? Focus is primarily on financing, investing, and dividends. We have spoken about this. Throughout the chapter, your main concern of financial management will be financing, investing, and dividends. As simple as that. Okay. So, take your eyes blinded, and still you'll be writing the same thing without hesitating. Yeah. So what is the focus of your financial accounting, sir? It's profit and loss, financial position, FP and FP. What is that? FP and FP. What is this? Financial position and financial performance. Now, what is the focus of management accounting, sir? Budgeting, costing, variance analysis. All these things are coming under management analysis, management accounting. Finally, what are the reports that are prepared under FM? What are prepared under FA, and what are the ones that are prepared under FMA? So, what are the reports that I'll be presenting, sir? First of all, I'll be presenting my capital budgeting plans of how will I invest, where will I invest. That is my capital budgeting plan. From where will I source, how will I invest, and what will be my return. NPV analysis, net present value analysis. What is present value analysis, sir? Net present value analysis simply means, it means if I'm going to invest in a venture, if I'm going to invest in a business or anything, what is the net present value of that organization, of that investment, and what will be my future value, so that I'll be getting a good rate of dividend. You get my point? Yeah. And optimal capital structure. What is my capital structure? So what is my debt equity ratios? How will I be, understanding what is the best capital structure for me? How will I be being less to the outsiders and will be keeping more to myself? All these things will be, all these type of reports will be prepared under your financial management. What will be prepared under your financial accounting? You've been learning this for the past 2 years. This a balance sheet, P&L, cash flow statement. Yeah, that's what it is. In management accounting, cost sheets, budgets, performance budgets. Yeah, this is also what you have already studied in your previous semester, I guess. Great. So, what is the next topic for discussion, sir? What is the next topic for discussion? In a syllabus material, we have a small we have a small text part called as we have a small part wherein the table illustrates some of the distinctions between of tasks between carried which is carried out by all of the financial roles. So financial management, financial FA, FMA, and FM. What are the three roles that? What are the key roles that there are differentiations in the organization? So as we have spoken here in the roles, in the instead of roles, we have focus on focus. So what is this person doing? What is that person doing? And what is that person doing? So we'll have a set of items. We'll have a set of items. जहाँ पे the items will be like uh, the items will be given to you and you'll be asked who is the person who will be taking care of this. Who will what is the area where this item is getting considered. So first of all, the review of overtime spending. What is the overtime spending, sir? I have a factory in Minimum, sir. The production happens 24/7. That is, I have workers who work for 8 hours a day, and after that 8 hours, I'll have a rest of a few hours, and again, I'll have a rest of 4 hours. That is, 8 plus 4 is 12. Again, for the next 12 hours, I'll be going with your night shifts, sir. But the 8 hour shifts are usually extended to 9 to 10 hours, and 2 hours are given as overtime. So if I'm actually employing someone as OT, if I'm actually employing someone under OT, I'll have to pay him more than the regular wage, or else he will run away. So who will take care of my overtime spending, sir? It's management accounting. Why, sir? Why is this management accounting? Because management accounting focuses on what was happening in the past. How much overtime you have taken, what is the review of the employees, and what will be the future. How should I control this in the future? Reviewing in the future based on past decisions, based on past info is called as management accounting. Depreciation of non-current assets. Obviously, you have been doing this. It's financial accounting. Establishing dividend policy. Yes, we have been speaking about this. We have been speaking about this in financial management, so we'll be taking it in the financial management because FM is divided into three parts: investment, dividend, and sources of funds. Simple as that. Data. Evaluation of proposed expansion plans. Expansion plans, again, you have two types of profits. One is retained, one is distributed. The retained will go to your new plans like this. And who was taking all these decisions? Sure, it's financial management who is taking all these decisions. Apportioning the overheads to cost units. It's again based on costing. It's costing, right? It's everything is based on costing, and costing is done by a CMA, who is a cost and management accountant. Since we don't have costing in the sector, we'll consider this to be under management accounting. Identifying accruals and prepayments. What are my amounts that that I've already accrued and I've not paid, and what are the payments that I've to pay, that I've that I'll have to pay. I've used the service and I've not paid. All these things will be taken care by the financial accounting in the form of your what do you call it, outstanding and prepaid incomes or expenses. All these things will be under your financial accounting. I hope you get this. So the next is it's a very very beautiful chart wherein it shows this is the first. As I've told you that your textbook has seven. I mean your chapter has seven different sectors. One of them is completed. Thumbs up. Second one, the relationship between your corporate strategy and corporate and financial objectives. What is the relationship between your corporate strategy and corporate and financial objectives? So for us to understand this, we have one small chart, and the textbook has given a long definition. The textbook has given a long explanation of what this chart means. So what I'll be doing is I'll be making the chart for you once again. On telling you what all of these items mean to you and how should you take care of these items. Great. Yeah. Yes, sir. So I'll be speaking about what my objectives and strategies and how will I be differentiating them, how will these be interconnected to each other. All these things will be spoken by me under this part. So let's start, sir. Give me a second. Yeah. So let's start the understanding of what your objective means, what your strategy means. Okay. Let's start with the example of Minimuse. Great. We'll start with the example of Minimuse. So what is Minimuse, sir? What is the thing what we'll be doing in Minimuse, sir? So as I've said to you, Minimuse will sell hampers for which people will buy hampers which will have different accessories, and it will be a great gifting option. Great. So what is my overall mission, sir? What is my overall mission? My overall mission is to be the most, or be one of the famous. I can't say the most because we are still beginners. Be one of the famous accessory and gifting brands in be one of the brands in any of the country like India in the next 2 years. That is my overall mission, sir. So is this anyhow financially related? Like, can I make out anything out of this plan or this strategy? That's not a strategy, that's just my goal of I want to be famous. Is there anything fun in this? Is there any clarity in this? Not at all, sir. So keeping in mind our overall mission, what should we form, sir? We should form broad-based goals. Keeping in mind our overall mission, what should we form, sir? We should form our broad-based goals. So what do you mean by broad-based goals, sir? What do you mean by broad-based goals? As I spoke about Minimuse, as we spoke about a brand, Minimuse, who wants to be famous in its operations, but Give me a second. But the organization's main or motto, main mission does not specify anything, anything in terms of monetary, anything in terms of specifically monetary terms, specifically commercial and financial goals. So what will I be doing, sir? My broad goal should be like I should achieve a turnover of around, not rupees, of 200 2000 or $20,000 in the next year. I should launch new products or new hampers, new combos every 3 months. See, these plans still do not actually tell me. These plans still do not actually tell me of how to do and what to do and when to do. But they still, they're still precise than what my overall mission is about. It's broad but precise. It's broad but precise, but yeah, that is how it is different from your overall mission and your broad-based goals. I hope you get it. So what will I do with these broad-based goals, sir? I'll be splitting them into my details objectives. So each of my broad goal, I'll be splitting them into my detailed objectives or targets. What will I be doing, sir? I'll be splitting them into detailed objectives or targets. Tell me, sir, what is the meaning of detailed objectives and targets? What is the meaning? So, as we have spoken, achieve a turnover of 20,000. How will I be doing that? Is that a detailed objective for me? Yes. Launch new combos every 3 months. Is that a detailed target for me? Yes. What is the target, sir? To launch one combo. What is the target, sir? To launch one combo. In how much period? What's the deadline? In 3 months. That is my detailed target. What is my target, sir? To achieve 20,000, to have a turnover of $20,000. What is the time period, sir? In the next year. That is 1 year, 365 days. That is my target, sir. So I'll have detailed targets now. Now I have everything, in a systematic, jotted down way. What are these objects? Let's talk about how are these objectives. These detailed objectives or targets are SMART. You all know about what is SMART. SMART means specific, measurable, achievable, relevant, and time bound. Is this specific enough, sir? Is this specific enough? What is my target, sir? Achieving a turnover of, around $20,000 in the next few years. Is that specific, sir? Yes, it is specific. Is it achievable, sir? Yes, it is achievable. Is it measurable, sir? Yes, it is measurable in numbers. $27 is a measurable number. Is this relevant for me? Yes, it is actually relevant for me. Is this time bound? Yes, it is time bound. It is 1 year. So that is how your detailed objectives or targets are. Now I'll be splitting. What I'll be doing is I'll be splitting these items into 2 parts. I'll better take this in a different place. Yeah. Yep, come on. Okay, what's up, man? So I'll be later splitting this part, splitting my detailed objectives or targets into 2 categories. One being my commercial objectives, and the other being my financial objectives. So for commercial and financial objectives, we'll better do it in the next page. Because I hope I can't do it in this page, or else I'll completely take this to the next one. Yeah, so we can do this. So what I'll be doing, sir, I'll be splitting them. Point number one, point number two, into what, sir? Into my commercial objectives and financial objectives. So, what are my commercial objectives here? I'll have a set of commercial objectives like on three of my levels, that is corporate, business, and operational. I'll have financial objectives on three of my levels, that is corporate, business, and operational. As simple as that. And what will be my, so I have my objectives ready. So for me to achieve these objectives, I'll have to have some strategy. I'll have to have some plan. If I say I'm going to Hubli this week, that is my objective. My objective is to reach Hubli. What is my strategy? I'll be going by a plane or train or a bus. What is my strategy? Great. Yeah. My strategy. What is my strategy? So this chart will make you understand that your financial objectives or your commercial objectives are completely linked to your financial objectives, and all of these are completely interlinked to your strategy of how you work. So as we have spoken before, there are three sectors where we operate. Okay, there are three sectors where we operate. I'll jot it down for you. One is corporate. The other one is business, and the final one is operational. So what is the difference between corporate, business, and operational, sir? So corporate means all the decisions which affect the brand value of your organization, which are directly linked with corporate decisions, with only the top level decisions which will affect the whole setup completely in one shot, are called as corporate items. What is a business, sir? What is business, sir? Business is nothing but buying it at low cost, selling at a high cost, making profits. That is what is business means. Dhanda, sir. So dhanda. So after corporate, after recognizing the image, all of what everyone does is business. What everyone does is business at a different corporate level. And finally, what is operational, sir? For to do my operation, what is the operational activity that I'll have to keep in my organization? Inside my organization, what is the thing that is called as operational, sir? So corporate is usually uh, you know thought of when it is outside the organization with the outsiders. Business is usually in the same area, in the same industry, and operational is inside my own factory or inside my own organization. Great. So what are my commercial objectives, sir? Let's start one by one. So what are my commercial objectives, sir? So I say I have a commercial objective of expanding into new markets. Expanding into new markets is completely outside the organization, completely outside of my industry. So hence it falls under corporate. So I'll say expansion into new markets. Expanding into new markets. What is this, sir? It is a corporate objective. Why, sir? Because just because it is completely out of my industry, it is completely new to me. I'll have to handle this with great care, and will have to have my reputation at risk, and hence it is a corporate objective. Finally, what is the next commercial, and this is commercial as well, because expanding is purely linked with marketing. Expanding is purely linked with marketing, and it doesn't have to do anything with my financial, and hence it is a commercial objective. Later, I'll acquire a new premises. I'll acquire and equip a new premises to do. So what I do is, for my organization Minimuse, what I'll do is I'll acquire a new warehouse, or I'll acquire a new building in Bangalore, where I'll be selling my product. I'll be selling my product. I'll acquire a new building. What am I doing with that building, sir? I am doing business with that building. If I get my point, it's as simple as that. What am I doing, sir? I'm doing business, and hence it is a business objective. And on acquiring my new premises in Bangalore, what am I doing, sir? What am I logically doing? I am marketing my product to the Bangalorean audiences, and hence it is completely commercial in nature. So, acquiring and equipping new premises. And yeah, and finally, sir, I have everything is going great. Everything is going great. I have expanded into the Bangalorean market at my corporate level. Later, I have acquired a new premise over there to sell my goods, and in that shop, I'll have to maintain liquidity levels so that I keep on paying my suppliers in a very good way. I'll have to ensure that my customers are paying me soon and soon, so that I pay my suppliers soon and soon. So, maintaining liquidity levels inside the shop becomes my operational and commercial objective. Inside the shop, inside my organization. So these are all of my commercial objectives. This is how it actually happens. So later now we'll see how my financial objectives are not independent but are dependent on all of my commercial objectives. Let's come down to, I'll take a new color. Yeah, this sounds good. So, I'll talk about how my financial objectives are not independent, but rather they are dependent on what type of commercial decision am I making. But it's also in a way independent, and how can they be utilized to understand my commercial decisions or commercial objectives. So, first one, ROC, EPS, share price. Second. Great. So what is my return on my capital investment? Return on my capital. Give me a second. Give me a second. So yeah. So what is my return on my capital employed? What is my earnings per share? What is my share value in the market? How will all these be dependent, sir? If if I have a great return on my capital employed, where will I be employing my capital, sir? Where will I be employing my capital? I'll be doing it in my corporate decisions. Where I'll be going into new markets. In this case, I'll be expanding into new markets, right? I'm expanding into new markets in this case, and hence, what will my ROC matter, sir? Yes, it will matter. Will my EPS matter, sir? Will the Bangalorean audience purchase my shares? What is the share price? Is it attractive? Is it in a growth, or is it in a dip? What is the earnings per share? What is the earnings per share? Does it all matter, sir? Yes, it does matter. It does matter. So, since we had a business decision of acquiring and equipping new premises. So, logically, in Bangalore, I started up a new business of mini news. And is this project giving me good returns? Project returns. Is this project giving me good returns, sir? That is what it comes from. So project returns is financial interest, is a financial interest, and it is it's a purely financial objective, and it comes under business. And finally, we have operational levels. In under the operational levels, we have maintaining liquidity levels. So for me to maintain liquidity levels, what should I what should I think of, sir? What should I keep in mind? I should keep in mind my cash levels, of how much is available with me in the form of cash and not any other assets, because cash is the most liquid asset, and receivable days in case of B2B business, as we have spoken. If I set an average period of 15 or 30 days for my bills, if I say that I'll have to pay my bills within 15 or 30 days, the chances of me getting my bills sooner becomes, you know, faster. So to achieve all these things, to achieve all of these things, to achieve all of these things, what is my strategy, sir? What is my strategy? Let's talk about strategy now. So, expansion into new markets. Mm-hmm. Yeah, just no, that's not even visible. And I was just no. Some good color, some good color. Yeah, okay. So, if I have to expand into new markets, maintaining my ROCE, EPS, and share price, how will I expand? How will I expand? Is that by directly by directly going into the into firm as a new guy, as a new kid into a place where all great people are already working? Is that possible? Or I should acquire some pre-existing business over there, so that I'll have a I'll already have a established customer base. What should I do? Or I'll already have a supply chain management in that place if I acquire. So is it organic or acquisition? My strategy may be organic. I'll be like, no, I'm great with my products. I'll go and open a shop over there, and all the people will love it. That is organic. Or I'll be like, no, I'm still scared about the customers. I'll have to get money soon, and else I'll better acquire a pre-existing brand over there. I'll just purchase that brand, and instead of their products, I'll be selling my products. What is this? It is organic or acquisition. Next. For me to acquire new equipment premises, for me to acquire new equipment, sorry, for me to acquire and equip new premises, what should I do, sir? Should I buy the project or lease the project or rent? So lease or buy. What will I be doing, sir? Will I be leasing it out, or will I be buying the whole plant? It's completely based on what my project returns are. It's completely based on what my project returns are, and it's completely based on what my financial capacity at that moment is. And finally, for me to maintain liquidity levels in the organization, is it how will I be receiving payments, sir? Is it credit based? See, if it is credit based, it should be completely, under control of your receivable days. If it is credit based, it should be completely in control of your receivable days. If you are selling to customers, they'll be directly giving you cash. They'll be directly giving you cash on delivery. They'll be directly giving you cash on delivery, and this is how your objectives, your commercial objectives are linked with your financial objectives, and also are linked with your strategies. I hope you understand the point. For if you want to understand it even more clearly, you can keep on you can make on you can make up points of how Minimuse expanded into new markets. They acquired new. So in simple terms, I'll give you a diagram. So yeah. So this is Pranav, and Pranav wants to start a mini Mew store in Bangalore. So Pranav's what does Pranav want to do? At corporate level, he wants to expand into new markets. At business level, what does he want to do? He wants to open a shop in Bangalore. He wants to open a shop in Bangalore. And this shop, in this shop, what will he be selling, sir? He'll be selling hampers. So what for whom will he be selling? He'll be selling to direct customers or consumers. So consumers, what will be did? At the operational level, what should I do, sir? He should maintain liquidity levels. Great. Now, what is the ROCE from a business, sir? What is the EPS in Bangalore, sir? What is the share price, sir? All these things should be considered under my financial objectives, or my financial goals. And what is my strategy, sir? What is my strategy, sir? Will I be doing this, or so this process of acquisition, will I be doing it in organic way, sir, or I'll be doing acquisition? Or this property, will I be leasing it out or buying, sir? And this, operational objectives to for me to reach, will it be based on cash or credit? As simple as that. The whole chart is memorized for you in one simple example. If you go on with Minimus, you can remember the chart, and if this chart is asked in your examination, you'll be writing it very clearly with an example of your own, with a company of your own. Start with, let's have a company. Let's assume we have a company called as XYZ Limited, and it wants to expand into a new market in Bangalore. So expansion into a new market in Bangalore is a commercial matter, and it is completely based on corporate aspects, and hence we consider it under corporate and commercial. And same way you can continue with all the other items in the chart. These are few of the financial and commercial objectives. Are not all of these. It is not complete. It is there's a whole lot of it, and these are a few which are important from your examination point of view. Yes, sir. So we have a question for today. We have one question for today. After this question, we'll be ending the class, and the part 2 will be ended. After this, I'll be directly posting the next parts in the part 3. Great. Yeah. How much time have I spent, sir? It's already 1 hour. So yeah. So let's answer this question for today. It's a textbook question of yours. It's from the textbook of yours, and we'll be answering this question. The following list contains some commercial items, some commercial objectives or targets, and some financial objectives or targets, and some strategies. At each level of business, each level is corporate level, business level, and operational level. Each place one in each box in the table as appropriate. So what should I do, sir? First, I should know what this is. Is it a financial? Is it a financial strategy? Is it a commercial strategy? Or sorry, is it a financial objective? Is it a commercial objectives, or is it a strategy? So for me to understand this, we'll be reading all these points, and later we'll be jotting it down into boxes. So since I can't put in completely on this thing, I'll be giving them numbers called as 1, 2, 3, 4, 5, 6, 7, 8, and 9. Yeah. So first one, implement a just-in-time inventory system. What is a just-in-time inventory system, sir? JIT, or just-in-time inventory system, means whenever I get an order, I'll directly buy my raw material from the supplier, make my process, work on it with my process, and then later sell. It means maintaining almost very least to zero inventory in my organization, so that I don't have to spend a lot of holding cost, right? And that is a strategy. This is a strategy. Where is this working, sir? In my organization, inside my organization, in my stores. So This will be a strategy at operational level. Great. Next one, increase earnings per share by 5% on pre-or sir. So earnings per share is again your financial targets. Increase. It's not currently happening. It is going to be happening in the in the next period. It's a smart objective. It's a target. So what type of target is it, sir? It is a financial target. And financial target at what level, sir? Is it at corporate business level or operational level? Not at all operational, because it's not inside my organization. Not at all business, because it's not linked with my activity. So it is corporate. Next one, sir. Acquire a rival for share purchase. What does it mean, sir? Remember we had spoken about Pranav going to Bangalore. Will he be starting up with an organic business, or will he acquire a rival over there and finally work on his business? What will he be doing, sir? For if I have to acquire a rival, it will be my strategy for expansion in corporate level. Yeah. So it is a strategy that I'll have to be implementing at my corporate level. So this will be number 3. Buy 4 new cutting machines for $250 each. So cutting machines. What is a cutting machine, sir? It is a machine which will be working in my organization, with which I'll be doing my business. What am I doing, sir? Is this a target? Buying something, is that my target? Not at all, sir. It's not at all a target. So if it's not a target, directly my commercial and financial targets have been closed down. It is one of the strategies. So where is this cutting machine used, sir? It is used in my business, sir. It is used in my business so that I can produce more and I can sell more, and hence it is a business strategy. Achieve returns of achieve that is again it is a target, returns of 15% on manufacturing investment. So first of all, sir, if you have a number given over here, if you have a specific number given over here, it is most likely to be your financial objectives. If it is based on returns on investment, ROCE, EPS, or anything of that, it's based on any ratio, it is completely financial. And achieve returns of 15% on your manufacturing investment. So I've done an investment, sir. Where have I done my manufacturing investment, sir? In my business. At my business level, I've made my manufacturing investment, sir. And on this manufacturing investment of $250 each, that is around 100, 250 CR each means 2,50,000. That is 1 crore dollars. I need at least 50% investment. I need at least 15% of return on my investment, sir. I need 15% of return. So this will be number 5. It is a business level financial target. Next one, sir. Improve the ratio of current assets to liabilities from 1.7 to 1.85. As simple as that. See, it is a financial target. Because we are talking about current assets and liabilities. It's covered under your financial accounting. It's covered in your FA. And this is done at operational level in our organizations, where we take care of all the current assets and liabilities, and hence this point number 6 will come down to your operational level financial target. Reduce unsold inventory items by 12%. So again, unsold inventory items regarded with outsiders, it is completely based on my marketing. It is completely commercial in nature, and hence, and where is my inventory kept, sir? Inside my stores, inside my organization, and hence number 7 is a operational level commercial objective. Next, update the manufacturing capacity to incorporate new technology. Manufacturing technology. What is the manufacturing technology, sir? This one, $250 machines. So people are saying that I'll have to upgrade this so that I can incorporate newer and newer technologies. Again, it is commercial in nature, because incorporating new technologies outside, it's what demanded by the outsiders to me. and so which will reduce my cost and which will reduce the cost to my outsiders as well, and hence it is a business level commercial target. Number 8. And finally, improve the brand awareness within the UK. Improve the brand awareness within the UK. What does it mean, sir? So it means give me a second, it's my cat. What does it mean, sir? So, first of all, UK is a new target for me, is a new target for me, is a new target market for me, and this is nothing but like my example of me expanding my business into Bangalore, into me going to the new shop in Bangalore. That is what the thing was, right? So, in that manner, for me to improve my brand image in the UK, what will it be, sir? It will be my corporate and commercial target, and hence your question is solved. It is as easy as that. As easy as that. You will be getting this question in your question paper. You might be getting this question, and you might be remembering me. Oh, the Pranav is a great guy. He taught me all of these. So yeah. So for today, we have we have ended up with this question, and with tomorrow we'll be doing tomorrow or sooner, tomorrow or any day soon, we'll be doing. Uh, what will we be doing, sir? Give me a second, I'll check. We'll be doing financial objectives. What financial objectives are? The third part in the third part in organization. We'll be talking about profit maximization and satisfying. We'll be talking about EPS. We'll be talking about critics of EPS. We'll be talking about all the other things. So yeah, that is it for today from my side. Have plans of notes of whatever you have written until now, and also study well.